What's going on, everybody? It's another episode of Sang Lucci TV. We are joined today by none other than Stephen Place from investingwithoptions.com. Stevie, baby, what's going on, man?
I'm doing good. How are you?
I am well, man. I am well. A lot of you guys don't know. A lot of you guys in my world don't know Steven. He does a lot of different types of option strategies. So we're going to get into those in a little bit. But one interesting note about Steven is that he's like 7'4". Is that right? Somewhere around there? 6'7". I mean,
Yeah,
7'4".
6'7".
Flip the numbers
That's
around.
pretty close. Yeah.
You know. Now, did you ever have a career in sports here?
I was kind of a big deal in high school. I was third string wide receiver my senior year.
Is that right?
Yeah. Yeah.
Okay. So you didn't have too many of the wheels, though.
I was pretty fast. My coaches hated me. I am 30 years of wasted talent.
So you're just uncoachable. So that's your thing. That's your shtick. Okay. All right. Another thing I was reading up on your background. You came from electrical engineering. You came from that kind of background. So give everybody sort of an intro on yourself, kind of your background, and how you got into trading, man.
Sure. My name is Stephen Place. I'm the founder and head trader at investingwithoptions.com, where we teach people how to become great option traders. I am what I would call a recovering engineer.
Okay.
So I started out back in 2005. I was getting my engineering degree, and I started reading up on some books on trading like a hedge fund and futures trading, derivatives trading. I said, okay, I really want to get into this. And so I did, and I started doing pretty well, and I started blogging about it, and it started to get attention. And so I decided in the middle of a market crash in 2008 to quit my well-paying, very stable engineering job.
Oh, man, and shit was crazy then. Shit was absolutely insane then, man. Yes. Options prices were off the chain then. All right, so you quit this job. Where were you working at the time? Where were you working?
A defense company.
Okay.
On the Space Coast.
Okay.
So, yeah, and I didn't like you said. I'm not coachable. I'm unemployable. I'm such a terrible employee. So I said, I got to figure something else out because they're going to fire me in like a month.
Oh, man. So, it's funny you say that. Because usually people who say that are those who have, let's say, been out of work for a certain period of time. And they're like, hey, you know what? I'm just not socially I can't socially acclimate to these environments anymore. So I can't, I'm unemployable. You, on the other hand, are kind of a different story. What makes you so unemployable? I got to know this. We got to know this.
I got suckered in to the Tim Ferriss 4-hour work week stuff.
Oh, here we go.
Yes, I can do this.
Yep.
Follow my passion. And I did. And I'm good at what I do. I'm a 6-year overnight success.
Nice.
And it was a struggle initially, but I've developed my strategies more. I know how to teach people better, and I know what works and what doesn't, no matter what the market's doing. And I think that's kind of my specialty.
Interesting point here. My pops was also, in electrical engineering. He had that kind of background, and he was, this was old school. He was making the chip wafers for Intel and digital and everything before they got bought out by Intel. Do you feel like had you stuck around in the engineering world that, there wouldn't be that much room for you for, that kind of career, so to speak? My father seems to think, it's all done and blah, 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 this and that, but he's been out the game for a while. Thankfully to me, and me buying Citigroup in 2009 at $1 a share, and Bank of America and all this kind of other stuff. But what do you think about the career in engineering here that you, let's say, would have had?
It's still there. My specialization was in cell phones.
Okay.
Basically hacking cell phones. Hopefully that makes sense, where we can track things and things like that. And this was back in 2008. This was before the iPhone and before all of the sort of new wave of mobile devices really took off. So that space is still incredibly strong. Okay. Knowing how to code is still an incredibly strong talent to have. You can still be a linchpin in a company with those skills.
Right. Now, do you still tinker? I mean, do you still tinker around? Do you still try to do this on the side? You know, you got a couple side businesses going on. What's your story?
No. You know, if I've got a website, and if the website breaks, you know, I've got a pretty good experience with that. But other than that, you know, I'm just focusing on the financial side of things.
Okay.
Yeah.
Okay. Very cool. All right. So let's get into this here. I think we wanted to discuss a little bit about non-directional trading here. So why don't you tell everybody, I mean, we got your background here, but why don't you tell everybody about the website and about your particular strategy, you know, and what you try to preach out there to some of your subscribers?
Sure. I'm a big fan of diversified risk, I guess is the best way to call it. And I've simplified this down a lot. I used to have a bunch of different trading strategies, but it's basically two things: directional trading. So that can be calls and puts and credit spreads and things like that. And then the other side is what I would call income trading. And that's basically non-directional trading and statistical trading. The past 6 months, maybe all the way back to November,
I would definitely say back to November. I was going to say the same thing.
Has been like a golden age for income trading.
Absolutely.
We have, in domestic markets, we've seen no trend. We've seen all reversion and selling premium, especially about 2 months out, because there's still premium to sell out there.
Definitely.
It's been such a wonderful edge.
So for the newbies out there, or let's say anybody that's just tuning in, I mean, how would you describe that in sort of layman's terms? Why has the last 6 months been so incredible for these sort of non-directional trading strategy versus, you know, buying a bunch of call options in fucking Google and, you know, buying a bunch of weeklies in Google and trying to make a mill here?
Income trading is a set of trading that's non-directional in nature, and it makes money off of the time decay in options. And it makes money as long as the market or stock stays within a specific range. So the worst thing that can happen for an income trader is for a trend, either to the upside or downside. So if we have a rip higher or rip lower, you're going to lose money. Right. We haven't had a rip, a proper rip in 6 months.
In a long time.
Yeah, we haven't seen any kind of liquidity event to the upside, and we haven't seen anything to really justify panic. You know, we had some stuff in early March, but that was it. Yeah. And so it's been incredibly boring tape, but incredibly profitable for income trades.
So a real quick question on that, because I have a sort of disaster story of my own. Like 2014, I basically was trying to top tick the market more or less, right? So this was like beginning of 2014. I really thought we were just going to turn over, and I got overly biased to that sort of position, and I just started selling every single call I could get my hands on, right? And I was pretty much like a year a little bit too early to the trade, more or less. But are there certain signs or indicators or things that you use to understand when to roll into directional versus non-directional? Is there something in particular that you use or you preach, or are you just looking at tape and you know, the whole market in general?
Sure. I don't trade directionally on the indexes. So the whole idea here, there's a fancy word called dispersion, where you get short volatility on the indexes, and then you go out and pick stocks. And so if the market's garbage, you make money on your income trades, you get chopped up on your swing trades, but it balances out, and net you make money. If you're good enough, you can find those individual stocks that are about to run, and they move independent of the market, non-correlated returns, which, again, past 6 months have been great for. So directional trading is fine. Just I'm not focusing on trying to top tick the overall market. I don't think there's an edge there.
Right? Okay. So can you give us a couple examples here of some non-directional trades that, let's say, you're throwing out there? I have a couple examples of my own that I want to kind of throw at you and ask you, okay, how would you trade around this? You mentioned a couple things before we hopped on: calendar spreads, iron condors, and things like that. Can you throw out some examples of some trades maybe recently that you've made that have worked out pretty well?
Sure. So, for example, one that I did recently, and we just closed this out, was an iron condor in July. And the way I like to trade iron condors is I don't hold them all the way to expiration. I think that's entirely too risky. I like to go about 2 months out and then hold it for about a month. What most people don't understand, you know, if you see that theta curve where theta is exponential as we get closer and closer to expiration, that's not true for out of the money options. the most decay occurs between 2 months and 1 month. Okay.
Right, you're saying right between that gap when we go from 2 months to 1 month.
That's kind of the sweet spot for out of the money options to really decay. Because after that, once we go from 1 month to OPEX, out of the money options are hilariously stubborn. They just tend to keep their premium, especially on puts. The skew gets high, and you know, it's just not.
Yes, I've actually noticed this. And by the way, guys, if any of you guys have ever bought, you know, have sat there and held monthly options that are, let's say, 3 months out or 2 months out or whatever, you know, as soon as we roll into the first of that month, your options get just lopped off a good 20, 30 cents, or, you know, it doesn't matter, obviously percentage wise. But that happens very quickly, right as you flip over from end of the month to beginning of the month.
Yeah.
Indeed. All right, so give us a couple examples here.
All right, so this one specifically was a July 1970-1960 bull put spread combined with a 2210, 2220 call spread. Okay. Now, here's the cool thing.
Now, this is SPX, correct? Or
this is SPX. This is in July. The total credit for this, and this is where I changed it up, because what most people don't understand with income trading, non-directional income trading, is technically a lie. It's always net short. It just always manages to start net short.
Okay.
So what I like to do with iron condors is I don't go full size on the call side.
Okay.
So I go full size on the put side and half size on the call side. So it's called an unbalanced iron condor.
Okay.
And that reduces the upside risk, because the upside risk is the biggest risk with iron condors. That's the biggest risk you have to manage. You know, if the market pulls back, you're going to do fine. If the market crashes, you're not going to do fine. But, you know, you can manage risk before that event happens. Right. But if we just see that slow trending grind higher, it's not going to be very fun.
Right.
So, yeah, it was a half size on the call side, full size on the put side. Pulled out about 75, maybe 60 to 75% of the maximum credit and just got out. Now I'm looking to redeploy this same kind of trade in August here soon.
Okay. And then throw my throw my stuff out there. For example, like I'm directionally bullish on Google, for example, right? And what I'll do now, because of the same things that you're seeing in the market through your metrics and however you're looking at them, is that you don't get these clean. We're not getting these clean breakouts anymore. You're not getting you know, something breaks out through resistance and you get this nice clean breakout. There's only a couple names that you might have that on, Gilead being one of them, and, you know, a couple other names. The rest of them, you'll get a great move one day and then you'll get this fade trade. You'll get this huge fade trade. So what I've been doing on the day trade thing is fading any of these large volatility spikes, and then rolling into later strikes and later expirations to stay bullish those particular names. But it's difficult to do because you got to come out of the weeklies, the ones that, you know, but for example, the Google I had for this week for, you know, 565 calls, 570 calls. If you don't take that premium in this market, you're going to get fucking hosed, man. So I want to get your sort of opinion here on the directionals with the weekly options. I know you have a whole kind of thing about it. I want to hear what you got to say.
Okay, so especially with high beta tech.
Okay.
Like if you look at a chart of Google, if it didn't finish like it did today, if this were 2013, we'd be at 580. We'd be at 580.
We'd be at 580 in one day. In one day, we'd be at 580, and I would make $250,000. I'd make $300,000.
But if you're getting long weekly options, or if you're trading weekly options in general, you're basically trying to make money off the intraday volatility, and you're trying to make money off the intraday momentum. Generally,
absolutely.
It's like trying to pull water out of a stone right now. Because of the reversion, because of the lack of follow through, the lack of liquidity, it's summer trading. There's just not as much follow through anymore.
Absolutely.
I'm a believer right now. If you do want to trade directionally and you want to hold on for any kind of size, you can't do weeklies. You can't do weeklies. You need to scale in to monthly options with a duration longer than 30 days and trade around a core position.
Right.
You know, you can let's just say you go half size into some like August 570 calls,
right?
And then if it pulls back, you add more. And once it bounces a little bit, you get rid of that and you continue to work your cost basis down.
Yep.
You know, that would be a good strategy.
Yep. So I did the
Or
same thing. I did the same thing in financials. Like I've been long Wells Fargo, Citigroup, Morgan Stanley, every single one of these things, and I just keep rolling into the new expirations. Anytime I get a volatility spike, come right out of them and buy the next month, and that's
and
what I'll end up doing.
the alternative strategy I would consider, but it doesn't work, is something like a diagonal spread, where, for Google, let's just say you buy the August 550 call and then you sell the weekly 570 call.
Right.
But because the term structure is so skewed, because weekly options have an incredibly low implied volatility relative to monthly options. Everyone and their mother continues to sell weekly options because they think they can, try and capture that fast theta, but it's really not the best risk reward right now. If we were to have something like 2010, 2011, it was different back then call diagonals and put diagonals would work for income. But it's just, the strategy isn't there right now.
Got you. So I want to kind of break and go into a little bit of a tangent here, is that, the people that you come across, let's say, that are looking for guidance in the market, and you end up becoming their coach and their mentor, where do you feel like people come into the option space? Do you feel like everybody comes into the option space wanting to gunsling with these weeklies, and they have to get smoked out, and then they come find you, or then they come find me to give them some sort of wisdom here on the situation? I mean, how do you feel really about traders that come into the markets? The first thing that they learn is options here. I mean, what's your sentiment here on that?
A lot of my clients are maybe 5 or 10 years out from retirement, already have a good nest egg, and looking to build extra income on top of that. They tend to be a lot more conservative and deal with the income trades. It's kind of like a barbell, where you have risk-averse people who only know what covered calls are and want to get more out of that. Or it's the other side of the barbell, where you get the gunslingers. And there's nothing wrong with that as long as you're good at it. As long as you have, it doesn't even matter what kind of strategy you choose with options. As long as you can time the market or pick stocks, you're going to be fine. But most people don't come in with knowing how to do that and getting the right risk management strategy and knowing how to manage your risk in an options position. So, what I see happen is sort of like a natural evolution, where people will come in and they'll buy options or do futures or do Forex with a ton of leverage, get blown out, and say, okay, I can't do this, so I might as well just short premium. Then they get blown out shorting premium, and and then it's like, okay, what can I actually do to enhance returns and reduce risk? So
let's say a guy comes to you, says, hey, I got my ass kicked here and all this kind of stuff. What trajectory do you send him on? I mean, are you basically building the strategy for them from ground up? Is there any automation in your strategy as well that you also offer your subs? Or, how do you help these guys find their way? Or do you just tell them, hey, stop doing that shit, get smarter?
So it's basically I guess it's a three-pronged approach. First off, I do nightly videos where I talk about the market and the trade setups so they can be prepared for the next day. I also do trade alerts. I am a big fan of people learning their own strategies instead of trying to copycat and look for a red light, green light.
I think most mentors are that way. You got to find your own way. We'll give you some wisdom here, but you got to build it yourself.
And then we have a trade floor, so people can come in and ask questions, and then I tell them to stop doing whatever they're doing. If you're a losing trader, you can't go from a losing trader to a profitable trader. You have to learn to get to break even first. So that's figure out, first off, keep a trade journal, and most people don't.
Most people don't. Most people, they try to. I mean, it's like any other good habit or bad habit, right? I mean, you go to the gym for 2 weeks, you feel like you're on a kick, and you stop doing it, and then 2 months later, you're a fat ass sitting there eating Oreo cookies. That kind of thing.
It's like trying to track your macros, like trying to measure everything out, because I do this every once in a while. I say, okay, exactly a half a cup of oatmeal is 26 grams of carbs.
Oh, here we go. See, don't even get Steve started on this freaking.
But it's hard to stay consistent. There are tools out there, especially if you're a directional trader. I'd highly recommend Trader View, VUE. And it'll just import all your trades for you, and then it can show you what you're looking for if you're a losing trader. There's classic behavioral economics. You let your losers run, right?
Yes, yes.
You want to find that 20% of trades that accounts for 80% of your losses and just cut those out.
And cut those out.
Get rid of that strategy or whatever tactic you're using to screw yourself over. You're going to get to break even.
Absolutely.
Right?
Absolutely.
And then you can say, okay, what trades are working, and then you just add size to the ones that are working, continue to cut the fat.
Right.
You know, I do a lot of trading strategies, but I think you need to find either your one setup or your one stock or your one income trade and hammer that down and then move on to a different strategy.
Okay, so you have a go-to kind of thing and then move on. Again, I mean, I preach many of the similar things, especially, you know, the behavioral aspect of the game. You know, there's certain places where your emotions take over and you want to be a part of some volatility spike that has just gone way too far and you're sitting there buying the top of it. And these happen with intraday, you know, gunslingers all the time in my world. That I really have to deal with constantly. So I want to ask you one question on the same behavioral tip. I mean, it seems like, you know, your strategy is very patient. It's a more patient way of going about it. It's more calculated risk way of going about it versus my kind of directional. Let's get in there. I see something on the tape. Let's go. Let's get as many as we can and try to juice this thing. If we're wrong, get the hell out quick. Try to minimize the loss as much as possible. Do you ever feel those urges, man? Do you when do you feel those urges? Is it Twitter calls? Like what the hell is it? You know, what gets you going that just makes you want to hop into something and do something stupid? I want to know that from you because I know it has to be something.
So I've been, you know, you think I trade boring and stuff. That's just because we've been talking about the non-directional stuff.
True.
You know, I don't gunsling on an intraday basis. Every once in a while, you know, I see that perfect setup on something like Netflix or those high beta tech names that haven't moved anywhere for a while. And I'm like, you know what? If this sucker breaks to a new week's high, it has a chance.
Worth the risk.
Like,
it's going to be worth the risk.
Throw some calls out there.
Okay.
You know, but I do trade breakouts. I do buy calls and puts straight up. It's just, you know, when I buy calls and puts straight up, I'm trying to get paid for the risk I'm taking. So
I got you.
It tends to be a higher risk kind of trade, or I'm looking for expansion and volatility much more than what the options are pricing in.
Okay.
That sounds fancy, but I'm looking for a big move.
Absolutely. Absolutely.
Yeah, so if you're buying breakouts or selling breakdowns, you want to the good rule of thumb is if you're looking for volatility expansion via breakout, you want to be a net buyer of options. If you're fading or looking at retracements, then you want to sell credit spreads or just sell calls and puts straight up. Okay, that's the overall framework I work with directionally.
So could you now, you know, going a little bit further for traders who, let's just say, have maybe $5,000 accounts, $10,000 accounts, what would you advise for them who, let's say, might not be able to get a margin account and might not be able to delve into some of these, you know, some of these spread trades because they don't have these kind of margin accounts? What would you say to these guys?
Sure. The first thing, if you're trying to trade for rent money, you're not going to win. I've experienced it with people for many years where they say, okay, you know, my rent's $1,500 a month, and I need to sell options to make this premium, and I'm like, you're not operating from a position of strength. It's incredibly difficult to do that. I know of like 5 people, I guess, maybe, who've actually pulled that off.
Right. Very small bunch.
If you're starting with small accounts, I would look at doing credit spreads only, 30 days out, and learning how to scale in and scale out aggressively.
Okay.
So, for example, you know, if you get bullish on a stock, you sell some spreads at like an 80-cent credit, then you add it $1.20, and then once the stock goes for you, you get back out at 80 and you pull that 40 cents out, and you just kind of trade around that spread. Okay. You know, don't try and trade 5,000 stocks. Try and trade 10 stocks.
Right. Or the position where you try to hold till expiration and you try to take 100% of that premium. I have been on a bad end of that in a while. I remember selling. I used to get real dangerous, bro. Thursdays and Fridays, I used to sell weeklies on, the high beta names where I could still get 50 cents to $1, right? I'd sell pretty aggressively too.
Yeah.
This one time I sold a price line option for maybe like $2, right? The shit was trading 5 cents. It had a 5-cent offer. There was zero bid, right? It was done. And then all of a sudden the stock jumped like 15 points. In like 10 minutes, bro, the option went to $15 and then closed at 0. I covered at 6 and I took a freaking $60,000 loss. Guys, when you're writing for time decay and you're sitting there holding until, the last second and all that kind of stuff, there's a lot of games that are played on OpEx, Fridays, quad witching and all this kind of stuff where random things happen that blow through, your expected premium gain. And things get pretty hairy. So I would definitely take a piece of Steven's advice here and sell, 30 days out.
There's kind of I call that the gamma knife edge.
There you go.
Right, where you go from a total delta of like 0 to a total delta of 80 per.
Yep.
And that's just options expiration.
Right.
There's a Murphy's Law associated with this where, no matter what contracts you sell, the market's going to test it at least once.
Absolutely.
So you might as well scale in, scale out.
Absolutely.
Don't try and go for the full credit because it's going to be stubborn and just sit there forever.
Absolutely.
And you'll go from a profit back to break even, maybe back to a profit. Well, why not just try and scalp that a little bit?
Right.
That's a trade evolution that I've changed for myself back in 2014, and it's changed everything because I don't get that gamma heartburn anymore going into expiration.
Which hurts sometimes.
Yes.
Yes. All right, man. So where can these guys find you, man? Where can they find you on Twitter? Where can they find you on the website?
Right, so,
and then what do you got going down? What do you got coming down the pipeline on the website?
So we actually just redesigned the
membership. I took a look. I took a look at the website. I noticed the front-facing website is very different than what it used to be. So you said you changed the membership aspect of it.
Yeah. Let me see if I can switch over and I'll just show.
Yeah, sure.
Let's see, not chat. Show.
Yeah, there's a share button on the left there. Top one, green.
There we go.
Yeah.
Okay. So I'm assuming you can see this website.
Negative. Can't see anything.
All right. Awesome. Let me. Well, it's live webinars, so.
Good old Google. Let me see if I can share from my side here.
How about this? Can you see that?
Yep.
Okay. So this is pretty cool. So every, you get the latest video right here. It gets updated every single day. We got video archives you can go to as well. So if you missed a past video, you want to look at something else, you can go over the past 10 videos.
Very cool.
What's really cool is you can look at current trade setups. So the stuff that I talk about in the video, it's discussed right here. So you can look at it really, really quick for swing trades. And then when we do trade alerts, they're all listed right here, including opening prices and risk plans as well. So that was a pretty cool little hack with Google spreadsheets and everything. We've also got a trader chat. You can go through and you can look at the trade results. And I haven't lost very often, which is kind of nice. So I've just jinxed myself. And then you can go back and you can look at all the past trades.
Great. Now, how often are you updating these? Are we talking about like one trade alert a week kind of thing? Is that your?
It really depends on the opportunity. We're running about maybe 3 to 5 trade alerts a week.
Okay.
On the nightly videos, we're looking at 10. So if you want to trade more actively, we're looking at Google long, Baidu short, Visa long, Splunk long, and some of these have been sitting around for a while. So they're. It's been a pretty good,
very cool,
pretty good couple weeks for us.
Very cool, man. Very cool. All right. Is there any plans for automation for you in the future? Any plans to automate any part of your strategy? I mean, you come from the engineering background, so I'm like, okay, are you going to add some of that into your playbook?
It's some of the screeners I use make it kind of semi-discretionary.
Okay.
I don't, in terms of directional stuff, I haven't found a good. It's tough to pull options data for directional trades and
extremely
to back test it
Extremely
to
tough.
get that clean data.
Yeah, for anybody who doesn't know, I mean, to subscribe to an opera fee, to get this data, really crunch the numbers and all that kind of stuff, I mean, it is very costly to do so. It is extremely costly to do so. So again, this is why, you don't see a lot of that out there yet. You definitely see it in obviously the alert software and all that kind of stuff. But just for, guys like us, you don't see that too often.
There is a new cool piece of software that I've been using for income trades to backtest my income trades.
Okay.
To be consistent across asset classes, you look at delta. You say, okay, I'm looking at a 15 delta iron condor or something like that. There is a tool called Quanti Carlo.
Okay.
And it's an income trading backtesting tool. And it's incredibly, it's hard to get around initially, but it's sophisticated with what you can do. You can say, okay, if my net delta reaches 40, then roll this trade, and it'll automate the rolls as well. So if you do a lot of advanced rolling and other things for income trades, and they've got clean data, they have clean options data going back for a while.
Nice.
They don't have a whole lot of directional capabilities. It's more for an income trade kind of thing, but it's a pretty cool tool.
Very cool. Very cool. How much of your portfolio are you throwing at, let's say you get pretty bullish on something just from a timing perspective or whatever. I mean, how deep will you go in these things?
I try and plan my risk at 1% of my portfolio.
Okay.
Now, with income trades, it's more size because it's a higher odds trade. I'm looking to allocate about 40% of my portfolio, split it off into 20% each on each month, and then go from there. Right. And then just look at swing and day trades for the rest, and sort of dry powder and sanity hedges on the side as well. So it's fairly conservative.
Okay. All right. Very cool, man. All right. So, guys, this is Stephen Place here from Investing with Options. Anybody that has any questions for him, go ahead and shout us out on Twitter. You can find him at Stephen Place, right?
Yep.
Okay, so you can find him at Stephen Place. Go ahead and shoot him questions if you need to. We're definitely hoping to bring him on, for a couple more guest spots later on, where we can just sort of rant about some option stuff. Any cool trades that you got working in the pipeline here? I saw you had that Baidu. I was actually long that Baidu this morning, and then it looked like ass later on today. But any big trades here you're planning?
Okay, big trades. I'll just talk my book then.
Yeah, what do you got?
Cheetah Mobile.
Okay.
Is one of those. It's CMCM. It's a the internet security space is kind of a late stage rally right now. A lot of them have matured, like FireEye and Splunk and even Cyber, right? Cyber. Yep. Cheetah Mobile's been in a range between about 30 and 36 for about a month. It's a compression breakout trade. This is one where you probably want to anticipate the breakout rather than trying to wait for the confirmation of the breakout, because it'll fade.
Yep.
Right. But I think long calls right here, pretty decent bet for a swing. Ideally, you want to see a move to 40 and then start scaling out, because that's when the breakout's obvious. Okay. So that's one I'm looking at.
Okay.
I was looking at.
You also do add in a lot of crowd mindset. You also do add in a lot of sentiment. Just that, and that to me comes from just years of experience here that you've kind of picked up. So that's great. Yeah, that's great. So what else you got?
I was looking at Amba Short on Friday after the close.
Oh, man, what a monster, bro. What a monster, man. So there was tons of options activity that went off on the put side of the 120s, and it was like maybe like a $250,000 bet. Shit came out of nowhere, bro. Yeah. And then the rest of the day, it just punked out. And today, obviously, drops another 20 points. I didn't even trade this thing, but wow. It had to happen at some point. It had to happen at some point.
And honestly, if it gaps down tomorrow, it's probably a fade.
It's probably a fade.
Sell some put spreads and just try and trade around that.
Yep. What else you got
for another swing idea is Visa. If
Visa, dude, absolutely. On the long side here or on the short side?
Long side. I think it breaks above 70. It's probably going to run to 73 and change.
I totally agree with this, and I would wrap this in with the financials as well, even though it's not really like any of these regional banks or any of these other things. But these credit cards have been so great, such a great long vehicle, sort of credits put spreads after these big washouts that happen on these things. These things have been great trading vehicles to the long side.
It's a hedge fund darling. It's like a source of liquidity, kind of like Apple, and just people just park their money in there.
Yep. Any speculative crazy trade you got going on right now? Anything you're throwing out there?
I mean, Cheetah Mobile is about as speculative as I'm going to get.
What do you think about all these IPOs out here, man? What do you think about all these restaurant groups IPOing, Fitbit, all this new shit that's coming out, man? What do you think about all these IPOs? Are they saying top of the market here?
No. And
okay.
if you look, so Mark Andreessen, one of the guys at his firm, did a report on saying, okay, are we actually in a bubble? And they looked at the total funding size and the total IPO size and late stage, and it's nowhere close to where we were in 99, 2000.
In 99, yep, okay.
I don't know if it's frothy or not. I actually haven't. I've been trying my best to tune out the noise right now, so I haven't been focusing on stuff like Fitbit.
Yeah. Plus, you got the baby. You got the baby, man. You got the baby, guys. He's got a newborn baby girl.
She's screaming in the other room, and my wife's pissed that I'm doing a video on the internet right now.
So, I mean, it's a good time to kind of detach yourself to some extent to some of the noise out there, the grease stuff that's going on. I mean,
it's helped. And, I said to myself, trade with lower frequency, more size, do more income trades. And luckily, this market has been nice and reversion-y. So it's been great for income trades.
All right. Any last words here before we cut off here, Stephen? Guys, this is Stephen Place again from Investing with Options. We're going to have him on soon, man. This has been a great interview. You're in Florida right now, right?
I live down the street from Canal.
Oh, so you live right there. You live right there with is he ever home now? I feel like he's in another country every single time.
I don't know. I saw him this weekend, and he said, I just got back from Puerto Rico, and he's probably going to I don't know, Thailand or something on Wednesday or something. So,
love it. Are you joining him on any of these festivities here?
No, we have an infant, so we can't go anywhere.
Hey, listen. We all make it happen.
We went with him. We hung out with him for a week in Costa Rica in 2013, and we almost died.
Guys, this is Kunal from Bulls on Wall Street. Very good friend of both of ours. Yeah. He's more on the equity side of things. And again, like Stephen and I are in the option space. And Stephen covers a whole world that, I don't really hit on too much. In my world, people get more, as they get more advanced in their options sort of savvy, then they start incorporating hedging strategies, spread strategies, diagonal spread, calendar spreads, a lot of these other things. And especially with markets like this, you can really find solace in some option strategies that can really cut down your risk, add some income here to what you're doing, and give you some peace of mind that you can kind of chill out for the summer, man. So that's all, Stephen, man. Dude, thank you for joining us, man. We'll have you on soon, man. We will have you on soon. Any last words for everybody?
You talk about different trading styles, and I think one of the best things to understand is, directional trading and proper financial speculation is where you make your money, and income trading is where you park it after you make it. So it's kind of like a cash flow returns funnel, and that's, kind of the model I'm working with.
Cool. Very cool. All right, guys, hit him up on Twitter at Stephen Place. Again, investingwithoptions.com. Stephen, man, talk to you soon, bro.
Thank you.